Hello and welcome to the weekend special of Companynama. I'm Srishta Tiwari. All through the week, the Adani Group took over the corporate world and how. We'll tell you about that and much more, but first, over to the corporate updates first. Pharma major Sun Pharmaceutical Industries on 30th of Jan announced the acquisition of 3 brands from Aksigen Hospital Care used in post-operative inflammation in patients undergoing minor surgery and dental procedures. The brands Disperzyme and Disperzyme CD and Flogam are approved by the Drugs Controller General of India. Aksigen Hospital Care is a research-driven healthcare entity with more than 2 decades of experience in the healthcare field. Sun had earlier in January bought US-based Concert Pharmaceuticals for $576 million. And in a stunning turnaround, Air India, along with its low-cost subsidiary Air India Express, is likely to post a consolidated operating profit this fiscal year. According to the Economic Times report, the Tatas had taken over AI just a year ago. Improved yield on the international routes and a better management of cost have boosted the financial performance of the airline. In December, Air India had a passenger revenue of 3,100 crore rupees on standalone basis. Bharti Airtel said that its African arm, Airtel Africa, posted a 7.5% growth in profit after tax at $193 million, about 1,586 crore rupees in the third quarter ended December 2022. The company had posted a profit after tax of $180 million in the same period year ago. The revenue of Airtel Africa during the reported quarter increased by 10.7% to $1,350 million from $1,219 million in December 2021 quarter. Meanwhile, Airtel has hiked the entry-level tariffs in 18 of 22 telecom circles. The first round of hikes happened in November 2022 in Odisha and Haryana, where tariffs were raised from 99 to 155 rupees. The tariff hike is in the remaining 4 circles may also take place soon. The Adani Power, Jindal Power and Vedanta are among 12 companies that have expressed initial interest in acquiring the distressed producer GVK Power. GVK Power was admitted for corporate insolvency by the Hyderabad bench of the NCLT last October on an application filed by the Axis Bank. Punjab State Power Corporation, which has a power purchase agreement with GVK Power, too submitted an expression of interest. Megha Engineering and Infrastructure, Rashmi Metallics, KLJ Resources, India Coke and Power, iLabs Investments, RKG Fund and Capri Global were among others who submitted EOIs. And over to the segment that focuses on major controversies and disputes around corporates. Let's take a look at those corporate giants that were on the radar this week. Topping the list on the radar this week is the Adani Group, and troubles have been mounting over the group. Last week, we told you about the Hindenburg report and the resultant share route of the group, and this week the same continued. On January 31st, the Adani Enterprises managed to get its 20,000 crore FPO fully subscribed, but retail investors were the notable absentees in this issue. On Feb 1st, Credit Suisse refused to accept Adani bonds as collateral for loans, leading to slump in the group shares. In the evening on the same day, the AEL board met and decided to call off its FPO, saying that it would be morally wrong to go ahead with the issue. This opened the floodgates of regulatory interventions. The RBI asked banks to disclose their exposure to the Adani Group. Following Credit Suisse, Citibank also refused to accept the Adani bonds, leading to further bleeding of group shares. And at dawn on Friday, Dow Jones removed Adani Enterprises from its sustainability index. Following this, BSE and NSE placed 3 Adani shares, that is Adani Enterprises, Adani Port and Ambuja Cement, in additional surveillance margin framework, which means that the investors will have to provide 100% margin even in intraday trades. This whole episode has wiped out over $110 billion in the market cap of the group companies. And to make matters worse, Bangladesh announced that it would renegotiate its power purchase agreement with the Adanis. The National Company Law Tribunal on February 2nd allowed Torrent Investments' plea challenging bankers' decision to hold a fresh round of auctions for the takeover of Reliance Capital and said the challenge mechanism for financial bids has already concluded. The order will prevent lenders of Reliance Capital to hold a second round of auctions in pursuit of higher value for the bankrupt company. The tribunal declared the bid of Torrent at 8,640 crore rupees being the highest. The NCLT had ordered status quo on the auction process on January 3rd and extended the stay on January 23rd. The Committee of Creditors (COC) is expected to challenge this order at the NCLAT. In more news, Reliance Capital has a consolidated debt of around 40,000 crore rupees and the RBI had applied to initiate insolvency resolution process against the Reliance Group company at NCLT Mumbai bench. Subsidiaries of Reliance Capital that are pushed for insolvency resolution are Reliance General Insurance, Reliance Nippon Life Insurance, Reliance Securities, Reliance Asset Reconstruction Company, Reliance Home Finance and Reliance Commercial Finance. RBI appointed Nageshwara Rao Y as the administrator of Reliance Capital's insolvency process. In a setback to the JKC consortium, the new owners of Jet Airways, for which the Supreme Court on 30th of Jan upheld an NCLAT order directing the payment of the Provident Fund and gratuity dues of the grounded airline's former employees. This was an NCLAT order dated October 21st, 2022. The top court refused to entertain a plea moved by the consortium and upheld the NCLAT order. The board of Vodafone Idea has once again approved the allotment of optionally convertible, unsecured, unrated and unlisted debentures worth 1,600 crore rupees to the American Tower Corporation. This comes after shareholders of Vodafone Idea had on November 21st approved issuing these shares to settle the dues of the infrastructure vendor. However, this was conditional on the conversion of debt to equity by the Government of India. As the company has not received any communication from the Government of India, the conversion and the OCDs could not be issued to ATC within the validity period of 15 days of the shareholders' resolution. The Enforcement Directorate on 31st of Jan carried out searches on premises linked to Stray Group of companies in Kolkata. Sources said that the raids were carried out at multiple locations in connection with the alleged irregularities in two Stray companies, that is Stray Equipment Finance and Stray Infrastructure Finance, which are currently undergoing corporate insolvency proceedings. As per sources, along with the official premises, the office of the promoters at Alipur area of the city was also covered in the search operation. While it is not clear if any fresh case has been registered against Stray for ED to probe allegations of money laundering, the ED has been investigating 110 crore rupees a loss caused to Stray. Shares of global IT services provider Birlasoft tanked nearly 9% in trade on February 2nd after reports emerged that one of its key clients, the US state-based medical devices manufacturer Invacare, has filed for bankruptcy protection. Birlasoft in October 2019 had announced that it signed a $240 million 10-year deal with Invacare to provide IT services. The filing of bankruptcy puts the potential 6 to 7 years of annual sales at risk, while further clarity is still awaited on the quantum of the sum which is at risk for Birlasoft. But ahead of Birlasoft's Q3 results, the stock was marginally shy of its 52-week low during the session. The street is expecting a mixed set of numbers from the company. And it looks like the corporate world was taken by a storm despite the Budget 2023 buzz. But moving on to our final segment, let's find out what was up in the startup world this week. The Finance Bill 2023 has sought to include foreign and non-resident Indians under the ambit of the contentious angel tax provision applicable to the early stage startups. The fine print of the bill now requires non-resident Indians and foreign investors in private companies, including startups, to pay tax on any or all shares that are issued on premium pricing. This is expected to increase the tax burden on foreign angel and seed investors, according to investors and experts. This move could dent the startup investments in the country by foreign investors such as SoftBank, Tiger Global, Alpha Wave and Sequoia. Byju's has dismissed another 1,000 employees, including several senior roles in verticals like strategy, technology and product. Many senior vice presidents drawing salaries of 1 crore rupees and above lost their jobs in the Bengaluru-based EdTech major's latest round of layoffs conducted over the last 2 weeks of January. The layoffs are part of a massive cost-cutting exercise that Byju's initiated last year to streamline its operations at a time when digital K-12 education businesses are finding it difficult to acquire new customers. Meanwhile, Byju's has launched a one-on-one home tuition pilot program to access a new target group in the K-12 market. The home tuition program has around 100 teachers and already hosted nearly 650 classes as per sources. And Razorpay X, the business banking platform of fintech unicorn Razorpay, has rolled out a new product, Forex service for startups. The new service will enable Indian startups to seamlessly transfer the funds that they have raised globally to India. Razorpay said that it aims to impact the benefit over 1,000 startups that are likely to raise foreign funding this year through the new service. Within 3 months of its beta launch, the service has enabled over 15 startups, including Virohan, Tortoise, Couple across EdTech, FinTech and financial services, among others, to transfer funds to India. And with an annualized run rate of 350 crore rupees under the Forex service so far, Razorpay expects it to scale up by 3 to 4 times in the next financial year. Well, with that, it's a wrap on this week's Companynama episode. See you again next week with more corporate and startup world updates. Until then, go ahead and download the Money9 app and grab Money9's latest exclusive content on personal finance. Have an amazing weekend and stay tuned to Money9.